Morning, everyone. Welcome to the Winpe Ignite Masterclass. A message to those participants whose Zoom name is not on our list of registered participants. Please either update your Zoom ID to match the one that you've used for registration, or in case you haven't registered, please use the link in the chat box to do so. For those of you who do not know us, Winpe is a pioneering not-for-profit platform driving gender diversity in the investing ecosystem by increasing women's participation as investors, capital allocators, and recipients of investment capital. Okay.
Yes, sir.
We work closely with PEVC firms in helping them shape and execute on DEI strategies, including hiring more women across roles and levels. When we launched in 2020, we heard our member PEVC firms saying, "We want to hire more women, but we can't find them." We were skeptical because we thought that there were enough women keen on PEVC careers. In the last more than 4 years, Winpe has undertaken a number of initiatives aimed at supporting PEVC aspirants, including job bulletins, AMAs with industry leaders, boot camps with recruiters, and career fairs. Through these initiatives, we have also come to realize that the talent pipeline for women for PEVC is much thinner than we would like for various reasons. Ignite by Winpe is a platform designed to support the female talent pipeline in the private equity and venture capital industry. Ignite offers online career sessions, masterclasses, job vacancy information, and a profile bank of women interested in PEVC roles accessible to member firms in an anonymized format. So when the PEVC firms hire, they can access our profile repository for candidates. The profile bank is open to women at all levels, including those already in the PEVC. And as I said before, we hide the candidate and firm names in the database that is shared with the hiring firms. Please join the Winpe Career Network WhatsApp group. The link I'm just going to share on the chat box here to join our profile repository. This WhatsApp group will also keep you updated on our sessions and with information on job openings, which we keep posting there. I'm sharing the group link in the chat box in just after I finish introducing our speakers here. Before we move on to today's session, a reminder that if we do not find your name in the registration list, we will have no choice but to remove you from the webinar. So please either update your display name or fill out the registration form, the link of which I'm just going to put in the chat box. Moving on, our topic for today is, if I were starting my PEVC career today, senior investors reflect on what they do differently in today's market. Introducing our esteemed speakers, Varuna Khatri. Varuna is an investment professional in real assets group at CPP Investments with nearly a decade of experience across the full investment cycle. She has worked on complex investments across transport, logistics, telecom, data centers, and energy transition sectors. Varuna holds an MBA from IIM Shillong and is a graduate of Hindu College, University of Delhi. Anjali Mahajan. Anjali is an investment professional at Lighthouse Funds with 3 years of experience in consumer investing and previously spent 4 years in investment banking at Axis Capital. She began her career in product design at a global engineering firm, which sparked her transition into finance and private equity. Anjali holds a BTech in electrical engineering from NIT Allahabad and an MBA from IIM Kozhikode. Mansha Chugani. Mansha is Vice President, Investor Relations and Business Development at Everstone, based in Singapore, where she focuses on investor relationships and sustainability initiatives. She previously spent 6 years at Partners Group and began her career at Infosys. Mansha holds a Bachelor of Engineering degree in Computer Science. And our moderator for today is Kaushalya Venkatraman, who is also a Winpe ambassador. Kaushalya is a seasoned corporate lawyer. Her practice areas are mergers and acquisitions, private equity, and venture capital. She represents both institutional funds, large MNCs, as well as startups, and has been consistently ranked in IFLR 1000 as a notable practitioner consistently since 2022. And she has also been ranked in Legal 500. Currently, she's a partner at Chandiok and Mahajan. Some housekeeping rules. The session is being recorded, and an edited version of the recording will be made available for future reference. You can type out any questions during any time of the session on the chat box. Kaushalya will pick them up as and when it fits within the discussion or at the end of the session. Now, without further delay, let's get started. Over to Kaushalya.
Thank you so much. And I'm going to start alphabetically with each of our speakers today. So that would be Anjali first, Mansha second, and Varuna last. I'm sorry, this is the alphabetical way. I would like to, and I know that we've got a really great introduction about each of these people and sort of what they did, but I would like to hear from them their own experience of how they entered the PEVC ecosystem, some of the key career decisions that they took early on in their careers that shaped their journey. And I know that not all of them have pure finance background, and what they would do differently if they were starting today. And of course, everybody makes mistakes, and what were the sort of key learnings that they learned from those mistakes. So let's start first with Anjali. So Anjali, over to you to discuss and reflect upon your career journey so that the audience has a little bit of context of how some of these career journeys have shaped.
Sure. Thank you, Kaushalya. No, so as I think about my career journey I started as an engineer. Uh, Finance happened to me wherein I personally wanted to get closer to the business side of things. Taking the own decisions. Looking out at businesses myself more from the decision taking point of view, not staying at the background of when the action is happening. So that is how it happened. Uh, Started as an investment banker, and that is where rest is history. Um, as I think about my early career decisions, well, it is very difficult to identify anything. It's a mix of rather a lot of things that happened, but there was one thing that stood out for me. Way back in my career, I decided that, hey, I want to be part of a high performing setup, but in an organization where they are also in that progression, the natural progression of growth, where they are also trying to reach the goals that they have identified, but are not fully there yet. So I want to say that probably there were opportunities and there were chances when the big and not to take away anything, but big brands that come into picture, I was evaluating whether I want to go in an Indian setup, an Indian fund versus a global setup, a global fund. There were times when I decided that I'll stick to the Indian side of things, wherein the I can see the decision making happening in front of me. There is more opportunities to learn and see and grow with the system as they grow. So probably that was one very early career decision that helped me identify where I want to go, and that is how even Access Capital happened. When just out of college, I had offers from some of these global banks, but I decided proactively to get into this Indian setup, wherein I'm closer to the ground where the decisions are actually happening and the market that I'm working for. Something that I would do differently when I start today, probably, and just given there are so many things happening, from a macro side of things, more and more protectionism, onshoring happening, which 10 years back, I couldn't think that these can be reality as well. And even AI, which is inevitable, which is increasing anxiety, maybe we'll end up being redundant of sorts. So maybe what I would want to do differently if I start my career today would be to identify my niche, as in what and it could be anything. It could be a sector itself, as in what I want to really truly stand for in my career, what I want to be defined, as in who I am. So maybe I'll just focus on a couple of sectors, build my relationships in that sector, get known for that in and out, and which is very difficult at the entry point in the career, wherein you are expected to be available for every assignment that comes to you. But what I believe, maybe I'll want to focus on building a brand of myself, wherein what truly I bring on the table. Uh, it can be in terms of my knowledge, it can be in terms of my relationships, in terms of my network, probably something that truly defines me differently. That would something that I would want to go forward with. And uh, just to end with that, probably in terms of mistakes and key learnings, while see, it's a career, multiple things have happened, and there are ups and downs which keeps on happening. But uh, one thing that has really stood with me is that as I progress from my early part of the career to the mid-level management where I am today right now, is truly to read the room and know my audience. There have been times when uh, I've been presenting my work, and um, it's just natural to show all the work that you've done, and you are so engrossed in the deal that you are evaluating, and everything feels very rosy. So there are times when I've really felt the narrative slipping out of my head, my hand, when the team and the room wants to hear something different. So maybe it's a softer aspect, that as you realize that you have to think from the perspective of who is the audience, uh, narrate your pitch, present your deal in the fashion as they would want to hear, uh, and divorce yourself just from being on the deal side of things. Maybe just be a risk taker, how they are thinking, how they are underwriting, and that is how probably you present, you phrase the stuff that you're putting across the table. That was the biggest learning that happened while on the job, and even my folks have taught me, as in, uh, you are a deal person, that is that. But then what is different to you would be how you take it forward when you're presenting it in front of the audience, and that is the next leap that will happen when they will decide that you are able to narrate it in the fashion that they want to hear.
Thank you, Anjali. That was really so. As I understand it, I think the couple of things you were talking about is to develop your own brand, your own niche, and largely on the mistakes that you learned would be, the fact that we all need to read the room and the audience when we are sort of pitching or projecting something, and not get too involved in the execution. So that was really good, well thought out. I do have a question for you, which I think is relevant, which has come from Neha. And she's asking you, what is the team structure at the fund in terms of the broad departments and the respective team roles, and what are the key skills that a person is expected to have for that? So I think she's asking you, what are the key skills for each role at the fund? So if you could just please get into that aspect.
So probably, and I'll start bottom up. So you have associates and analyst pool who are feeding it into the system, as in terms of all the knowledge, the data, whatever is required. So the key skill that is required at that level is, I would want to say, an eye for detail. That should define everything. Wherein you are the one who are coming with absolute perfect data. For the second level, which is the mid level, I would want to say, which is actually the VPs and the investment professionals, which we call the middle management. They are the ones who are actually collating all that data and then synthesizing the thought, which we typically in the investment world called, what is the story? Why are we looking at even this asset? Why this sector versus so many sectors which are different? So they'll be the one who will be weaving all those thoughts together, creating the narrative basis the data that has flown from down. So at that mid level, maybe the key skill required is that you know basically the framework in your mind, why one thing, why not the other, which is those key investment criteria, parameters, which we have thought or read about in the finance side of things. And it can be as simple as a valuation metric, it can be as complicated as a sector knowledge, which requires tons and tons of work to be done to build the comfort. So at mid level, you have to go deeper into the the mud, and get really confident of the pitch and the story that you're bringing around the table. Moving forward, you have, I would want to call this sector leads or the deal leads, which is the typical designation is an MD or a principal, which comes at that level. They are the ones who are anchoring that discussion, or are the deal leaders for whatever opportunity is being bubbled up. So at their level, they will not do that much of grunt work, which a typical the mid level and the associate would have done. At their level, they would do more of the promoter reading or the psyche of the market reading, as in, does this even make sense to enter into this space today? While Anjali might say that the sector is, the sunshine of tomorrow, but at their level, they will figure it out. Is that the right point to enter the market cycle? So that is one. And the software as yes, is the promoter good or not? And they have met and spoken to so many folks. So at that level, it would be just about making that and pressing that button, whether it is go or no go. So the skill there would be more experiential, while it would they would have seen basis multiple investment cycles that they have been in the industry, and then they would decide, and it would come naturally to them by instinct, why they should invest or why should not invest. And at the top, you have the IC sitting, which is the investment committee, which is the partners of the, in the fund, the GPs who are representing somewhere the LPs as well. They are the ones who will now wear the hat of an underwriter, the risk taker, that you are actually, you are having a fiduciary responsibility for somebody else's money. Would you want to just write the check? So they will ask you all the risk related questions, whether, and that could be as difficult question as ki kal ko ye company band ho jayega, what will you do? So you have to be prepared to answer all those things. So at that level, maybe again, it is more of an experience that you have, climbed up the ladder, and you have those things at the back of your head, that what can go wrong, and that is the hat that you will try to wear at that level. Hope that answers.
Yes, that was actually a really good response, Anjali. I mean, you broke it down across various levels. I found that satisfying, and I hope Neha did as well. Yes, she did. All right, thank you. So we move on to our next speaker for today, who is Mansha. So Mansha, if you could just sort of talk about how you entered the system, your journey, what you would do differently, and some early learnings and mistakes.
Okay, Shailya. And thanks, Vijayata, for the introduction earlier. Hi, everyone. It's nice to connect with all of you online. So quick introduction about me. I'm Mansha. So I have a bit of a flu today, and that's why I sound like this. But I currently work with Everstone Group. So quick introduction of Everstone Group. We do mid-market buyouts between India and US cross-border, mainly in healthcare and tech. We manage about 8 billion in AUM, and I am on the investor relations and business development team. So the opposite end of the table from Anjali and Varuna. How I got into this industry, so actually quite similar to you, Anjali. I did computer engineering in university. So I did 4 years of computer engineering, and then I worked with Infosys for a couple of years where I did a combination of coding, and then I also did like some project management work there. I was always interested in finance. I would read the news, know what's going on in the market, and just always, try to keep myself updated in the market, what's going on in the news. And I followed that passion. I quit my job and I applied to Partners Group, and I got it. So Partners Group is also a private equity firm. It's a Swiss PE firm. And
sorry, if I can stop you right there, Mansha, how
Sure.
did you make the switch from Infosys to Partners Group? Because that's very interesting. Because I
Yeah.
think a lot of people here would like to hear what really moved, that sort of, what moved them to hire you, right? So I think
Yeah.
a lot of people wanting to make the switch would like to know this.
Good question. I think so at that point of time, I was interested in finance, right? So I have an older sister, and she had some of her friends in the finance industry. So I would just go and speak to them, or just every time I would meet them, I'd be like, so how do you get into this industry? What skills do you need? What do I have to read? So that's honestly what I did, and I think when you're early on in your career, if you're curious and if you're excited about something, and especially now, when I joined Partners Group, at some point I was hiring people, and I'm not always looking for financial skills, right? You want to build a team of good culture people who are willing to work hard. So even with my interview with Partners Group, I was very transparent that, hey, I'm coming in 2 years later. I don't have any experience on investing, finance. I don't even know what an IRR meant at that point of time, but I'm interested, right? I want to learn. And Kaushalya, I'll tell you, initially I had my very own J curve where I was just, I spent a lot of late nights, a lot of reading, a lot of even speaking to my colleagues, hey, what does this mean? How does this work? And when I started off in Partners Group, I handled the venture and growth portfolio. So Partners Group does not do VC anymore, it's too small for them, but at that point in time, it was an interest asset class. And it was just very interesting to work, to look at real companies like Uber and, all these startups and how they really build the ground up. So I think, it was a combination of luck as well, to be honest, I would say. But yeah, I did go out, reach out to people, ask them, hey, what are you doing? What can I do more? And then I joined Swoop. So that was how I moved into this industry. Um, if I think about some of my learnings, which I wish I did a bit earlier on, I wish that I had a mentor a bit earlier. Because while I did speak to my sister's friends and stuff, I wish that found, was a bit more proactive to find somebody that I can really bounce ideas off. So one advice to all of you that start thinking about mentors now, because it's invaluable. The advice they give, the debates you have with them, right? It's actually quite interesting. And what I would do differently, I would think, I always say don't ask, don't get. And this could be anything, right? So maybe some of you are in university now and you want to do a project, or even at work, you want to join a different team, or even a promotion, right? Just to give you an example. So in one of my earlier roles, I joined and I did my first year pretty well. Is what the feedback, when we had the year end talk, and I felt I did well. I got good feedback, so I assumed I'm getting promoted that year, right? And I didn't get promoted that year. So then the next year, I said, okay, I'm just going to work hard next year, which I did. I worked really hard. At the end of that second year, when I had my year end talk, I prepared a list of points that I did well, what projects I worked on. It was a bit embarrassing doing that, but I just put down on paper, right, all my achievements. And then when I went to the meeting with my HR and my boss and my boss, I said that, oh, these are my achievements, and I think that I would like to be considered for a promotion. And I remember when I made that statement, everyone had a grin on their face. And then my HR said to me that, hey, Mansha, we actually wait for 3 years usually, but, sure, we'll consider your request. And I did get promoted that year. But I think the point that I'm making is that it's not about getting always what you want. First of all, you don't get, if you don't try, if you don't ask. But sometimes just standing up for yourself, right? And just asking, it could be a promotion, it could be some project that you want to get involved in, just ask, just always ask. The worst result is someone will say no to you, but it's a good feeling when you stood up for yourself.
Yes, I think there's one. Did you make any mistakes early on? I guess it's the only point, and then we have two audience questions. Mansha, do you
A
have?
lot of mistakes.
Everybody does
Uh,
those, don't they?
yeah, I think one of the mistakes I made was I looked at roles in stereotypical boxes, right? So someone would tell me that to be good at sales, you can't be an introvert, you have to be an extrovert. And I would advise you guys not to, obviously, yes, it helps, if certain skills help in your early career development. But let me tell you, some of the best salespeople I know are actually introverts, right? And even for investments, you don't always, obviously being good at numbers helps, but you also need to be a good communicator. And, as Anjali was saying, read the room, right? Early on. So I think that if you're really passionate about something and you're interested in something, don't put yourself in a box. So just be, just listen, just be open, just communicate what you want. And if you're passionate about anything, I think that's the first step conquered already, in my opinion.
Thank you. So I do have one question. I guess I have a couple of questions. The first one is from Neha, and she's asking, what are key guiding principles for you to identify ideas that will be successful in the future?
I think what we usually do is that we try to brainstorm. So when I was in Partners Group, for instance, what we did is that we used to do, obviously, you're busy in your day-to-day work and there's a lot going on, but we would make time to sit down and think about different ideas on what would change our business. And honestly, when we went through this exercise, initially I was just like, I have so much to do, right? What value is this going to add? But let me tell you, this was in Partners Group 10 years ago. We did a project on AI where we did this training of, these articles, which is an exit, what's a relevant article. And today, when we talk about machine language and AI, it's, I think about what I learned back then, and it's really relevant. So I feel that just kind of, maybe try it in your own organizations or even in your personal time, right? To just take time, and maybe set blockers in your calendar to make some time to think about different ideas and how you can do things differently. It always helps.
We have one other question from Ujjwal.
Mhm.
She's, I think, trying to switch from consulting and looking to switch. Sorry, I'm not sure Ujjwal is a girl or a guy, but I guess the question is working in consulting and looking to switch to be not a natural career trajectory. So she wants some guidance. To be more precise, they work in a financial planning and analysis function. Yeah, we just, is there anything that you need to say from switching from consulting and looking to switch to PE? I guess that's the main question.
Yeah, I mean, look, I think that all of you are here today on a Saturday. That's the first step, right? You all are passionate young people, and that actually counts for something. I think that do what you're doing right now, attend such conferences, speak to people in the industry, maybe map down a certain companies that you want to work with, and ask if you have friends working in the company, reach out to them, or just sometimes just LinkedIn message people, right? Hey, can I get coffee with you? See if they're hiring. And I think just keep track of what's going on in the market as well. That really helps. But start early, speak to people, and just get early targets of companies that you would like to work with. Honestly, it's not impossible. I moved from engineering. So in fact, your background is a bit more relevant. So it's definitely doable.
Okay. Yes. Thank you so much, Mansha. I move on to the next speaker, Varuna. Varuna, could you just talk a little bit about how you entered the system, what were your key career decisions, and what you would do differently? Sorry, Mansha's already spoken. Sorry, Varuna.
Sure.
My apologies.
Sure, Kaushalya, and thanks, Winpe, for having me here. For me, I think it was slightly more plain vanilla. I was always into numbers and finance. So I did my MBA in finance. Started my journey with an advisory firm. I was with HSBC Investment Banking, so started with transactions early on. While I enjoyed investment banking, what I found myself more interested in was the investor conversations, the risk allocations, the actual deal, cycle, rather than just executing a deal like a typical investment banker would do and get off it. I wanted to know how the risk return allocation works. What are the assumptions in underwriting? What are the risks I'm taking structurally? What might go wrong, as I think Anjali also alluded to. So at some point, I realized I didn't want to help just close deals. I wanted to decide whether they should happen in the first place or not. So I think it's just a mindset shift from short-term execution to more long-term ownership is what led me to private equity. Um, I think for those of you who want to transition, I don't think you need a perfect PE background. All you need is to demonstrate that you think like an owner and not just an advisor. So you should be invested in the decision you're taking. I think one of the early decisions for me would be to not just go for easier deals, etc. I took infrastructure and renewables for that reason, because I leaned into more regulated sectors, more cross-border transactions, structured capital stacks. It was uncomfortable, but I think those situations in my mind build real pattern recognition. So don't hesitate. I would suggest from the complexity. I think once you get in, nothing is rocket science, as long as you have the understanding and clear thought process to have a view. So that's what I would do. And I think the other early career decision is the technical skills. I think most of us overemphasize on that. But to my mind, I think that's a given. That's one thing that gets you the entry. But for a long-term career in investment, from my perspective, I think you need to be more solution oriented, have to have a view, have to have that structured thinking to take a decision. Again, not all decisions will be right. There's no pressure on that. There are a lot of investment decisions that most of us have made wrong. But I think to have that view is what is critical. What I would do differently would be I think building on a differentiated point of view, as I said, I think early in my career, I focused heavily on execution at a very junior level, getting the model right, running the diligence thoroughly, preparing materials perfectly. Now, that foundation, I'm not saying is not important, it is. But I think I could have accelerated my growth by forming and articulating stronger views early on, and at least having the courage to tell them out in the open more easily. Because what I've seen is senior investors are valued for judgment, not execution. I think for execution, you can get as many hands and leg as you need. There are multiple advisors on the block, but the judgment is what the investors are accountable for. And early mistakes, I think one, of course, I just said overemphasizing on the technical skills. Um, as I said, that's a given. I don't think we need to worry too much about it. That's a very learnable skill. Uh, the other one that I would want to put on the table is equating complexity with sophistication. Over time, I've realized the opposite is often true. The best investments are the one that you can explain clearly what drives value, what drives risks, and what is that you're underwriting. Because if you cannot articulate the downside in simple terms, you probably don't have full understanding of the transaction itself. So I would say don't go for complex, keep things simple, foundation right, and have the courage to form a view.
That's a really good, Varuna. I think clarity of thought is actually the most important and the crucial skill. Just a moment, I'd like to remind the audience currently that, we're here to sort of learn from the experiences of each of the speakers. So please keep your questions sort of relevant in that context. I'll now move on to sort of just having a lot of discussions about certain things that are, things that matter a lot in the industry today. And Varuna, I want to ask you, what skills matter most for entry and early growth in the private equity and VC space? I know you spoke about some of those aspects when you spoke about overemphasizing technical skills and sort of some of the judgment. But are there any other skills that you think that matter most for early and entry growth, apart from, of course, the technical aspects?
Yeah, I think I'll just put it into three very simplistically. One is, and I think I touched upon it briefly, is on the structured thinking. Can you think structurally? And I don't think there's any level of experience or seniority required in this one. It's at your level. Can you think clearly? When you look at the business, can you explain in simple terms how it makes money? What are the true value drivers? What are the risks? Not 25 risks, top 2 3 that you think. Can you articulate them? So that would be first critical thinking and being able to put your view on the table. And investment teams are generally small, so most people should be comfortable doing it. Commercial judgment, I think we've spoken. What beyond Excel sheets and spreadsheets can you think about? For example, in infra specifically, there are a million other things, right? Regulatory framework, survival. Is that possible or not? Is that the risk you can underwrite? Is the technology transitional or durable? How does the management behave? So there's a lot more that goes beyond a financial model when you get to investing. So that would be my second bit, commercial judgment. And third would be risk framing and communication. So this, again, from the people that I've hired and we've looked in our teams, what I've seen, the strongest junior professionals are those who can articulate the downside clearly. Modeling an upside is very easy. I think very few can articulate what are the risks that they perceive. Again, point is not to be right. Point is just to have that judgment when you're looking into an investment and communicating it properly. I think clear communication would be my
biggest
skill required at this point.
Got it. Speaking of, sort of clear communication, I'm sorry, I'm just digressing a little bit from the topic, is that I've heard this a lot when founders hold board meetings to explain, sort of what's happening in the industry with the investors. The best founders are apparently the ones who only focus on the downsides or what went wrong and the key learnings that they went from those mistakes. Because everybody knows the good things, but what people are expecting to understand is what is bad with, what we are doing. So that is a very critical, analytical thinking skill that a lot of people actually appreciate. I move on to my next question, which is to Mansha. Mansha, how should young professionals think about roles, platforms, and learning curves? Could you talk a little bit about that?
Sure. I think this point was just made a while ago that early on in your career, don't look at brand names initially, look at the job and what you can learn from the company. I think another point that I would highlight to everyone is just have a curious mind. And just to give you guys an example, so I joined Everstone Group 6 years ago when we had this whole lockdowns in because of COVID, right? So it was the day before COVID, and everyone was working from home already at that point. So I was asked, hey, come to office, take your laptop and leave, which is what I did, right? I took my laptop and I went and I started working from home. So the first month, I did my onboarding virtually. I read all the material, and just for some context, right now, Everstone, we're raising our fifth private equity fund. Back then, we were raising our fourth fund. So as you can imagine, everything was on a pause and everything was a bit slow, and I had a lot of time on my hand, right? So I was just sitting there, and I was like, I would attend all the team meetings and try to speak to people, but then. During one of my team meetings, I realized that was one of my colleagues. He was really busy, right? So I just reached out to him and said, "Hey, can I help you with anything?" And then he said, "Yes, please." And he gave me like two, three big documents. He said, "Read them and presentations." And I said, "Great." And then when I was working on that, I met this other team, which were an evaluation team, and they needed a hand. So I said, "Sure." And then I got involved in ESG and impact. So for about 2.5 years, or close to 3 years in Everstone, I did work a lot on ESG and impact as well. So as you can tell, right, just by being proactive and curious, I got involved in so many different things. And yes, my hours were a bit long and there was a lot going on, but I can't stress enough how valuable it is to know how the different teams work, right? I mentioned I'm in investor relations and sales right now, but I also, because of, my initial proactiveness, I got to sit on all the IC meetings. I got to sit on all the portfolio review calls. I know why we do what is our ESG theory, what we look to do. So I think if you have that opportunity, it's great. But sometimes, you might be in a different firm and we don't have such chances. Um, no excuses. Just go to people's desks, right? And just ask them for a coffee. Just be like, hey, can I have 20 minutes of your time? I'm just curious to know what you do. And if some of you are in university, just feel free to speak to your siblings, your cousins, as what I did initially when I was trying to make a move. Because I feel like if you have a curious mind when you're really young, that will really take you a long way. So don't be boxed by, I'm doing investments and that's the only thing that I should do. Having a big picture of everything, at the end of the day, when you move companies or roles, it really adds value to your career journey. Another point on learning curves, I feel that this is a secret tip that I use even to date, is that I always think that, success or progression is never linear, right? It's always like a ups and downs and, like a squiggly line. And I feel like there are certain days when I wake up and I'm inspired, motivated. I said, oh, I want to look at investors in this market, and I go do my reach outs. And then 2, 3 weeks, I'm just, not making any progress and there's not much going on. And I think is in those low periods where you actually build and don't give up. And I feel like a lot of people that I work with, a lot of more junior people, when things get hard, they just say, oh, you know what, I'm not cut out for this role. So I feel early on in your career, just, and that helps me even now. I think about that straight line, right, which is a myth. So progression is not a straight line. It's always ups and downs. So that is something that, I would say to keep that in mind when you do anything.
Right, that's really thoughtful. So I think curiosity, keeping an open mind, is just generally being proactive is something that I think is the message that you're telling us. My next question is to Anjali, and I think some of these aspects were sort of also brought about. You mentioned when you spoke about mentors, but Anjali, what do you think are, how important are networks, mentors, and brand building in a career? I know that Mancha, you spoke about it, but Anjali, could you also tell us a little bit about this?
Sure. Just adding on to what Mansha said. So, see, two words very important. So, as I think of my own career journey, both professional and personal, so these guys end up being your confidant, your guide, your biggest cheerleaders. And believe me, investing is a very lonely journey. So there is no tangible output that you'll see at the end of the day. And for what it might be, you'll end up spending weeks and there's no progress. There's nothing that you'll do. It's just making sense of the unknown. And that is where these folks help you share their, I want to say, intellectual space, bounce of ideas, point you in the right direction, and they have their own experience to build on. So you know that you're not throwing darts in just air. Uh, Many a times it could be that they might point you to to people in their network who are even more experienced and who can help you take a decision where you are stuck, and it's a gift that keeps giving, I want to say. But it takes time to build. So just be true to yourself as a person, your values, when you're approaching folks. And that is where I believe your personal brand will come into picture, because you're talking to folks who are decades and decades into this industry, and you're trying to network with them. So just be clear with what you stand for, and it would be good to identify what are those things and what are those values which you want them to take away in their head when they speak to you. And that is how these relationships become synergistic. Just for example, I just became a mother, so my daughter is 1 year old. And
Oh,
there have been times wherein, in my journey, I felt as if there is no way to get to office tomorrow. And these are the mentors, and that is where I said that they end up being your biggest cheerleaders. They were the ones who pulled me, and post maternity as well, that Anjali, you can go there. This is how we did it. They shared their own experiences, and so on and so forth. So it's not just a professional network that you build. It's more than that. And they are the ones who will pull you through the downtimes as well. So as I said, 2 words very important. Just get started off with that, and just keep in mind that you are respectful enough when you approach them, and don't try to be somebody else who you are not. They'll read through it.
very nice. Thank you. My next question is to all speakers. What are common misconceptions about working in PVC? So, Anjali, maybe you can start, and then I can ask Mansha and Varuna for their thoughts. What are some common misconceptions about working in this industry?
Sure. Because I came from outside the industry as an engineer,
Yes.
so yeah, it's not finance, and Mansha, Varuna also spoke about it. It's about relationships. It's about how you present yourself. It's about communication. It's just being on the lookout for as many things as you can. Learning can come in any fashion, but that learning cannot be just technical and financial learning. So just keep that in mind. The other thing which to me in my mind when I was an engineer was that the I bankers or the PEVC guys, they live a very flashy life, a very fast paced life, and in that black coats, jackets, and they'll always be on the road, just meeting folks, and there'll be an aura that will come with them. But believe me, it's not. The life is very slow, and Mansha and Varuna can add on to that, but it's a and I said it's a very lonely journey. There are times when you'll be doing everything right, but then everything falls apart. There'll be periods, and I want to call sometimes years as well, when it would be a dry season, when the things are not working. You have to just be on the top of it. Still, you have to motivate yourself to come to the job again and again, and do the same old thing when you know that probably it might not lead any result. So it's a very slow job, but I want to say it's the more patience you have, the more grit you put in during these periods, it will take you to places. Um, um, so I'll hand it over to other folks.
Yes, Mansha, I guess
Yeah.
this question is to you. What are some common misconceptions about
Sure,
working in
happy to
PVC?
add on. I think Anjali is spot on. I used to watch a lot of shows, I mean, I still do. Like you watch Suits, Billions, Succession, and you see all these people with fancy suits and, board
I'm a
meetings and
lawyer, and I hate, sorry to
yeah,
cut
see,
you
there you
there.
go.
I don't think that my life is anything like Suits, so I can assure you that.
Yeah, and I mean, not to completely disappoint all of you. There are like right now we are working on a co-investment deal, and we have many co-investment partners investing with us. So we are having individual discussions with investors, and some conversations are really exciting when you have to make a decision, right? But 90% or maybe 70% of the time, there's a lot of spreadsheets and Excels and PowerPoint decks that you work overnight and lots of patience. So I agree with Anjali. I think another misconception, I feel that before I joined, this industry, you know, a lot of people look at private equity as you hire, fire, and then you just do financial engineering, right? But that's actually not always the case. So, for example, at Everstone, you know, we are control investors, so we buy businesses, but then we also, you know, we look to make add-ons. So we actually hire more employees. We build businesses. So we actually create tangible value. So it's not just, you know, people have this notion that private equity, you just buy and you fire, you know, you just reduce the cost and you sell. I don't think that's fully, truly the picture. We also add a lot of value and, you know, diversify products and kind of scale the companies.
Thank you. Varuna, this question is now for you. What are some common misconceptions about working in this industry?
Yeah, I think Anjali and Mansha have covered all the key ones. But just for the audience to keep in mind, I think I'll repeat the top two that I think all three of us feel that it's not as glamorous as it looks. I would not say it's not glamorous, but it's not as glamorous as it looks. Most of the job is deep diligence, stress testing, and sometimes walking away from the deals that you've worked on like for months on. And it's not purely financial modeling. That's the second thing. Modeling is hygiene. The real work is understanding the risk that goes into it. The other point I would say is that other misconception, at least that I had in my mind when I started, is that confidence is same as dominance. What I've learned over the years in my ICs and different setups while decision making, that most respected investors are often the calmest voices in the room because they're clear on what they're going after. They know what they're underwriting, and they know how they're pricing uncertainty. And it's not just predicting the future; it's just what are the risks you're willing to take for the returns that you target. So I think it's a simple equation. We just overcomplicate in our minds to say it's something really that's rocket science. So I would just add and leave it at that for the group.
Yeah, thank you. Those are really good. I have one last question before I open it up to the floor. I will sort of open it up to the floor, and I think there is a feedback form that will be shared at the chat, which I think all of y'all have to fill in who have attended the class today. The last question is to Varuna. How does AI impact the PEVC deal making space today? Because I heard a lot in the beginning of the conversation about data, number, and then in the mid-level there is there is analysis, and in the senior level it's more about reading softer skills, reading the promoters, the industry. But do you think that AI can replace any aspect of this entire deal making stage? And if yes, what impact has it had so far?
Yeah, no, I think that's a very timely and fair question for where the world is heading.
Yes.
And this has been asked a lot. And the honest answer is yes, AI will change things, but only operationally. AI can accelerate analysis, but it will not replace accountability. AI makes us faster. It can help us analyze data rooms, summarize documents, benchmark markets, run sensitivities. It removes friction from information processing. But here's the part that doesn't change. AI doesn't allocate capital. It'll generate scenarios, it'll identify patterns, but what it cannot decide is which risk is a particular fund acceptable to underwrite or our mandate allows for, and the time horizon I want to apply, right? So even at CPPIB, we're really going after digitization and AI full hog, but only to the extent to make things efficient. I think human angle doesn't go. In infrastructure and energy, the risks that we underwrite are more regulatory, technology, partner, promoter, management, value creation, as I think Mansha also alluded to. These are all judgment calls. I don't think AI, neither today nor anytime soon, can take those decisions. So I actually think AI will make strong thinkers more powerful and weak thinkers more exposed. So the edge won't be in using AI. It'll be more what to ask AI and when to override it.
And you think that none of that sort of affects any part of early stage professionals because they are the ones who are analyzing most of the data. And you feel that AI would have an impact on whether to hire more of those in folks, or you think that that has not made an impact so far in your industry?
I think so far it hasn't because, again, by nature, PE industries and PE teams have been very small. to my mind, it will not really cut the number of employees. It might, optimize a little bit across teams, more on, enterprise and support level. But I don't think it will really cut short the numbers, because you still need people to ask the right question to the AI to be able to do the research that you want. Because I'm not 100% satisfied with what AI throws. So I want
I'm
somebody
not either.
to verify the rigor of it, ensure it makes sense before it comes up, where I can, look through the data and make a decision out of it.
Got it. Yeah, that's actually useful. So I think that would give the audience a sense of, they're not making a mistake moving in. I would just want to take a pause here for a minute and request all the participants to fill in, sort of the poll that was circulated, and then I will start with the questions. So let's just take a minute, and in about 11:54, we go to the questions that the audience have raised. Okay, so I move on to the questions that were raised. I think there are a variety of questions that have been raised by the audience, but let me sort of break it down. Neha is in capital markets doing, sort of equity and debt capital markets, and she's advising clients on IPO readiness. Do you think that there could be a role that would be relevant to her at a PE fund?
Maybe I'll quickly take that. Honestly, this is very relevant, Neha. And today, again, I'm sure you would have seen, right? Most PE funds underwrite to exit. There are very few who do long-term investing. For example, we at CPPIB, we do long-term. We've always been popular for very long-term investing, but even we've started looking at exit, and what you're doing perfectly fits on. So if you're really keen, I would say you build your profile to showcase how you've helped companies take a call, how you model exits, or how would you think about an exit for ABC project that you can showcase. So build your profile around that, but your experience is pretty relevant for you to join an investment team in a PE fund.
Great. I think the next question is from Pratha, who's a tax lawyer, and she wants to pursue an LLM next year aimed at law and finance. She's not sure whether, her current skills, would be relevant for her to sort of move into the PEVC space. I can maybe answer that question a little bit. Perhaps as a GC, that would be a great sort of, because I see a lot of lawyers enter in-house in the PEVC space as a GC, and tax is actually one of the very, very important aspects for any PEVC when they do deals, because, that's relevant. So in that context, maybe that's relevant. If that answers, I suppose, Pratha's question, then I move on to the next one, which is from Niharika. She wants to know, she has 4 years of experience in investment banking and 2 years DFI. And she wants to know, is there anything specific she needs to showcase in her CV when she's applying to the private equity funds?
Probably I can take that. I believe it would be more about the deals that you have anchored through in your journey at an IB, or you have looked at DFI. The skills pretty much remain the same. The skills don't change. It will be more about wherever you're applying. Just look at your CV if it is matching the sectors to wherever the fund that you're applying, and just maybe call out those deals and whatever relevant work you would have done in those sectors. Just make it very, very focused around the fund that you're applying. I think that would be it.
Understood. I think the next question is from Shruti, and she's at a family office fund, and she's looking at private and public capital. And she's a senior investment analyst. She wants to know if there are any ways in which she can build conviction in her ideas and pitch them forward with confidence. What do you think is something that she needs to think of when she's pitching her ideas?
I'm happy to take that. Hi, Shruti. I think what really helps me is to, and I'm actually not a very structured person. My desk is an organized mess. But when it comes to pitching or when it comes to my ideas, I always like to sit down either, on paper or on the computer, just write down my thoughts, right? Structure them. And even, if I'm just, even for internal meetings, sometimes I just like to prepare a couple of bullet points that I want to bring up. It's just a more efficient use of your time and the person's time, and also your ideas, right? When you put them down to paper, I think that really helps. I think it was another question as well, which ties on to what you did this. I would say that Also, always read the news, guys. I feel like every morning, I listen to a podcast, CNBC on Spotify, even if it's 5 minutes on the train. All of that, listen to some podcast. That kind of gives you ideas as well, and the way they present their ideas also helps. So just I would say write down your ideas, read them, in your own pace, and then always just listen to the news, listen to podcasts, whether finance or non-finance related. I think all of that really helps.
Understood. So I think clarity of thought is, I
Mhm.
think, is an ongoing theme. I think we have multiple questions on the chat group with respect to some of the lawyers wanting to move on to the private equity VC space and what they can do in there. And I think do you all have any sort of parting thoughts that you have for, I think, budding PVC enthusiasts who are not from the industry currently, but from different industries such as consulting, IB, legal. What are some of the things that they need to think of when they write in their CV, or what do they need to portray in their CV to get some of these jobs?
Maybe I can just start, and Mansha, Anjali, feel free to add.
Mhm.
I think you've seen both Mansha and Anjali have not been from the industry, have still made it through. So I don't think you need to have a relevant experience. But what I think you should compensate is with demonstrating investment thinking, show the commercial instinct, have ideas, be familiar to valuation. Again, if you've not done that, you can still learn, right? Have the sector depth. So because I would think funds hire, and at least that's what I look when I'm hiring a junior resource, for how can they think, not how much can they do. In fact, recently we've hired an analyst who had no experience on investing. She's from consulting background, but I know she can think differently. She'll add value from operational value creation perspective that differentiates her. I think everything else can be taught as long as you have something to add value to the team, and there's a fitment. I think it'll make sense. So do compensate with other stuff and expertise that you can build on the side.
Got it. So sorry, I'm just mindful of the time also, Varuna. So my apologies. We need to sort of, wrap this up. So I think with that, we sort of finished off on the thoughts and, sort of the discussion on the various things that people could do to sort of break into this space. I also want to remind the audience that they need to take 1 minute to fill in the poll, because I understand that some of you all have not done it. So please fill in the poll. And I now give the sort of mic or the floor back to Vijeta, who's gonna give you a nice thank you messages, and thank you to all the speakers again. I had really nice time interacting with all of you. Thank you.
Likewise, thank you.
Thank you for handing me the virtual mic, Kaushalya. Thanks everyone for joining us. We had a great turnout today, and we hope that you found the session useful. Thank you to our speakers, Anjali, Mansha, and Varuna, for such an insightful session, and Kaushalya for moderating it with so much enthusiasm and understanding of the ecosystem. As she has announced already, we have launched a quick poll. I will request all of you to please take a moment to vote and not leave the meeting without voting. That will really mean a lot to us. Just select your answer and click submit. Before we wrap up, I'm very excited to share that the registration for Winpe's Leadership and Summit Awards 2026 is now open. This is India's foremost forum for leaders shaping the future of private equity, venture capital, and entrepreneurship, bringing together investors, founders, and industry leaders for thoughtful leadership, recognition, and meaningful connections. Over the last 3 editions that we have had 1,300 attendees from close to 300 firms, and we've got to learn from about 160 industry stalwarts. You can find all the details and register through the link that we've shared in the chat box, or you can just visit our website and find the details there as well, www.winpeforum.com. You can find there are actually multiple discount options as well, especially for women who've participated in Winpe events previously. So please don't hesitate to write to us directly at info@winpeforum.com, and we'll make sure to assist you. We'd love to see many of you join us at WLSA 2026. It's shaping up to be an incredible event with a lot of new features that we've never had before. These Winpe Ignite online sessions are available on YouTube. For those of you who've missed the previous sessions, you can catch up on them on YouTube. We've shared the link in the chat box below. Do join the Winpe Ignite WhatsApp group, with the link for which has also been shared below, to keep yourself updated on more such sessions, job openings, and masterclass. Join our database where we share with our member firms to support their hiring processes. We've already shared all these links in the chat box. And lastly, don't forget to share your key takeaways of this session over social media with hashtags Winpe or hashtag Winpe Ignite, and don't forget to tag us. See you all in our next masterclass, which is coming up soon. Thank you so much to everyone for joining us.